Hi, and welcome back to the Food Fund, where we explore all things related to investing in food and beverage stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in great companies. If you love food and love stocks, you will definitely love this channel. In this video we will be doing an analysis of Campbell Soup Company and seeing if it would be a great addition to the Food Fund. Be sure to watch through the end of the video where I share my final thoughts on that. Now, let's go ahead and jump right in. Cue the logo. Let's start with some news on Campbell Soup Company. Campbell Soup's $2.7 billion acquisition of Sovos Brands was recently approved by shareholders. Sovos Brands makes pasta sauces, soups, and frozen pizzas under popular brands such as Rouse, Michelangelo's, and Noosa. The acquisition is thought to add to Campbell Soup's portfolio of high-margin, high-growth companies and should incrementally improve the fundamentals of Campbell Soup. Now, let's look at Campbell Soup's price action. Starting with the 1-year chart, we see that Campbell Soup had a CAGR of about -21%. Zooming out to the 5-year chart, we see that Campbell Soup had a CAGR of 2%. Campbell Soup share price has pulled back recently but is on a long-term growth trend. Now, let's take a look at the fundamentals. Gross margin is 31%. This is a decent gross margin. Revenue has compounded at around 4% over the past 5 years and has reached nearly $9.36 billion most recently. Steady revenue growth and decent gross margins make this a solid start to the analysis. Let's continue. Looking at cash flow, we see a -2% CAGR over the last 5 years for operating cash flow, while capex has actually improved at a CAGR of 1%. Free cash flow has steadily declined over time at a 3% CAGR. Though capex spend is improving overall, 2023 was really a turning point year as capex grew from $370 million from $242 million in 2022. Let's hope this change of trend does not continue. Weighted average shares outstanding are essentially unchanged over the last 5 years, going from 302 million shares in 2019 to 301 million shares most recently. Campbell Soup has both added and bought back shares during this period. Now let's view return on invested capital. Return on invested capital has steadily grown from 6.2% in 2019 to 10.1% in 2023. Though the return on invested capital is still pretty low, the rise over time does point towards improving efficiency. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 31 days in 2019 to 17 days most recently, Campbell Soup has slowly been improving efficiency managing inventory and suppliers. Last, let's explore Campbell Soup's debt. The net debt to EBITDA has fallen from 5.6 in 2019 to 2.2 most recently. This is a very good sign from management, indicating that the company's debt load is steadily being paid off over time. There are some surprising positives in the fundamentals of Campbell Soup. Should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Campbell Soup. It is a food company with a gross margin of 31%. The 5-year revenue per share CAGR is 4% and the 5-year free cash flow per share CAGR is -3%. Decent margins and revenue growth, but a decline in cash from operations is pressuring free cash flow downwards. A return on invested capital of 10% is okay and hopefully continuing to rise over time. Next, the cash conversion cycle of 17 days is decent and continuing to improve. Concerning debt, a net debt to EBITDA of 2.2 means that it takes Campbell Soup a little over 2 years of earnings to pay off their debt. So from a fundamental standpoint, Campbell Soup is a pretty solid company. Now let's switch our attention over to valuation. Campbell Soup is undervalued relative to the S&P 500 with a ratio of 0.6. The price to earnings growth, or PEG ratio, is 2.7, which means that Campbell Soup is overvalued compared to its projected earnings growth. Campbell Soup is a pretty solid company with the exception of their falling operating cash flow. For some reason operating their business has become more expensive over time. My guess is that they will cut the workforce following the closing of the Sovos Brands acquisition. Part of the purpose of that acquisition was to acquire high margin and high growth brands to bolster Campbell Soup's fundamentals. While the share count, capex, and debt might increase after the acquisition, I would expect revenue growth to re-accelerate and margins to improve. In the meantime, the share price will likely continue to fall, offering interested investors nice entry points. For me, the positives do not outweigh the potential right now, but I will be interested to reassess this company in the future. I will leave Campbell Soup off the watch list for now. Many thanks for watching. What do you think about Campbell Soup and its operating cash flow decline? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.